Okay, everybody, it's Thursday the 10th, and it's about 5:30, I guess. Yeah, it is. I had a question from a student about Haley, I believe. I'm going to go over there and log in over here and see if I can't answer it on the fly, just because I'm here still in front of my screens and Canvas. I go in this way because that's the way. Should I turn this up a bit? Let me see. Oh, maybe it is up as far as it'll go. It is. Okay. Um, I thought when I replayed some of that lecture yesterday, I was having trouble with audio, and let me know if you're having trouble with with anything I post. Okay, let's go to look at questions. Preguntas. There's Haley. Oh, we took care of Emily on Monday, and here's Ms. Johnson. Ms. Johnson says, I just finished the quiz for chapter 2, and I'm confused on the last question. It's asking you to find net income after giving you a list of transactions. Yeah, these are always tough. One of the transactions states that the company received $3,100 in cash for services to be provided in April. Ooh, a deferral. This would, this, why would this not be included in the net income calculation for March? Well, not obviously. Isn't it still technically considered revenue, even though it's unearned revenue, or it's just because the net income for March is not April when the services are provided? Um, I didn't read the whole question before I came online here, but to answer your question is very simple, and it has to do with the first principles of accounting. And I'm not I know these are hard to get your head around because what you're thinking in cash accounting, and what me and accountants who understand accounting are trying to get you to think in accrual accounting, right? So accrual accounting, um, the basic tenet of accrual accounting is the matching principle, where we match revenues and expenses in the time period where they take place. So you're absolutely right. It's asking you to find the net income after, I'm reading your question again, after giving you a list of transactions. One of the transactions states that the company received 3,100 in cash for services to be provided in April. Why would this not be included in the net income calculation for March? Because we didn't do the work yet, right? It would be in the statement of cash flows, but it won't be in the net income. And this is the genius of Pacioli. He said, a bird in the hand is worth two in the bush. We haven't collected that money yet. So it's not revenue until that occurs. Or we haven't performed the services yet, is what I should say. We did collect the money. We haven't performed the services yet. I don't want to confuse you. We didn't, so that simple line right there, to be provided, we got the cash, and you think, well, we got the cash. Why wouldn't we book it? Well, no, then it'll screw up our expenses and the necessity of periodicity in our presentation of financial results. I'll say that slower. It would distort the presentation of our financial results due to the idea of accrual accounting, where revenues match expenses in the period that they occur, periodicity, and the matching principle, which means we match, basically the same thing, means we match revenues with expenses. Why do we do this? Well, we didn't perform the services yet, even though we got the cash. So that's a great question, and it's one that strikes at the heart of what is going to differentiate you as accountants from other people on the planet. Because most people think, oh, we got the cash, it's part of our net income. Well, no, it's not, because you didn't perform the services yet. You got the cash, you didn't cut the lawn. You remember my lawn uh, question. And just for yucks, let me go into chapter 2 quiz, and I'll, before I throw this up for you guys, I'll go into chapter 2 quiz and show you those problems so you can see them real time. And I can tell you this, chapter 2 quiz, there it is. And my numbers will be different, but the ideas are the same. You see how my little thing, it points to the answer. So now what question was she interested in? It was, I think, number 15, if I remember correctly. So let me go down to 15 and see if I'm right. The company, TBMC question 2, following transactions. Company paid $2,000, 16,000. The company provided 3,000 to serve. They provided them. Company received 3,100 in cash in advance. Yes, so you don't add those in. So in this particular case, I wonder if I could use. Well, in the future, I'll start using my little blackboard thing, and I'll make it small over here, so I can do some of the math for you. But what they're trying to get you to do is, based on the information, what's a net income? It would be revenues minus expenses. So you'd have paid 2,000, that's an expense. Received 16,000, so now we're down to 14,000. Paid 6,200, that's 8,200. Provided 3,000 on account. That's accounts receivable, so it's as good as cash. Company paid cash 500. Company received 3,100 to be provided in April. Didn't happen yet. And the company purchased 5,000 of land for cash. That's not an expense. It's got nothing to do with anything. So here's the answer. Net income equals revenues minus expenses. Your net income 16,000, number 2, minus 2,000, number 1, 6,200, number 3, 3,000, number 4, 500, number 5, right? And you can see that land purchase is an investment, and it's a balance sheet item. Okay, I think we got it. You want me to go through, whoops. Maybe they got, I can't remember what these questions were offhand. Assets of 385, you can see the answer there. I'll just go through these quickly in case somebody wants to see some more of them. 13 is this one. Debt ratio, and there's no 13, 12. No problem with that one either. That's pretty easy, these debt ratios. 11, explanation, nope. Company purchase of debt supplies, debit supplies, and credit accounts payable. Just getting you to learn these. One, day after day, you just keep making these entries till they become a working part of your mind. They just, that's what memorization is about. Here's the explanation in this one, right down here, right? Beginning cash and that. Okay. Anyway, 9 is that one, and it's pretty self-explanatory. 8 here, same thing, self-explanatory. Getting you to do these pretty simple journal entries. Asset created by prepayment, prepaid insurance, right? Created a prepayment insurance is 6 is here, 5 here, little true false action. 4 is here. Another true false. I got a few of those. Sometimes I'll randomize these and it does weird stuff. Because I have a test bank, this giant test bank you can manipulate. I have a piece of software that McGraw-Hill provides. Okay, that's chapter 2. I'm going to shut up and just post this. So I don't want it to take too long. It takes forever to upload now on YouTube for some reason. But anyhow, I hope I answered your question, Ms. Johnson. And if not, re-email me. And I'm going to put it up on the discussion tab. Thanks very much. Talk to you soon.